Tom McGee, let's talk deals because Deloitte just finished its integration survey. And one thing that you found is that 30% of your respondents said that the synergies were not what they expected, below what they expected. Why is that?
First of all, thanks for having me on, Greg. What we found was that of those that thought that they were successful in integration, they employed some best practices. One, they had a formal integration plan with some really established synergy targets. Secondly, they had a dedicated or focused team on implementing that plan along with clear executive sponsorship. Third, they had accountability and a measurement process to measure their success. And finally, and something that's often forgotten about, is the importance of communication. Communication to your employees, but also communication to external stakeholders, customers, vendors, et cetera, to help them understand the rationale of the deal.
How vital is the time period between when the deal is announced and when the combination finally takes hold?
I think it's critical. I mean, time is money. And so while you're going to stage a level of effort over a period of time, that you really want to be prepared when that deal is consummated to hit the ground running with a formal integration plan to really be able to hit your targets as quickly as possible.
Do you think the managers overstate the synergies just to get the deal done?
I think it's always possible. I think what is more likely is that, you know, when a deal's done, business leaders do what they're best at, which is they go back to managing their companies. But sometimes they forget that there's this whole incremental effort that's necessary to kind of finish the integration. And quite frankly, sometimes the same individuals that are necessary to manage the day-to-day business are also the individuals that are really, really important to get the integration done. And so having the patience and discipline to finish the integration is quite important.
Which deals do the best or have the greatest synergies realized? Is it a big company buying a small company? Is it a private equity deal? Is it a merger of equals?
Yeah.
Which fare the best?
I don't know that any particular demographic group fares the best. I do think those, you know, key things, having a plan, having a team, having accountability, having a communication protocol is clearly important regardless of the size of the deal. Obviously, the larger the deal, the more complex, the more formal it needs to be. The smaller the deal, perhaps the less formal, but still those elements need to exist.
Judging by January and February, 2015 is going to be a great year for deal making. So talk about some of what you expect from here on in throughout the rest of the year. You got low interest rates, you got active investment bankers. We're going to see some action, aren't we?
I think the market fundamentals are clearly there for a continued strong M&A market. The things that you mentioned, strong stock market, low interest rates, a lot of capital out there, both cash and corporate balance sheets, and dry powder in the private equity space, and an improving economy. All those fundamentals typically lead to a strong M&A market.
And they're going to keep you busy. Thanks a lot for coming by.
Thanks for having me.
And thank you for watching The Street.